What's going on? Welcome back to the channel. So today when I talk to you about Virgin Galactic, I want to go over some of the data points, break it down, what's really moving it, and go over everything else you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. So Virgin is up 75%. Absolutely kick-ass day. 370 for the low, 660 for the high. But you are seeing a huge amount of volume. So 56.2 million shares being traded. 3.5 is the average. Same even goes for the options. You are seeing like record numbers of volume getting in. 3.5 million in calls, 3.3 in puts. 51% of all the options being done today are bullish in nature. And you can kind of see just the general average is around like 200,000. Currently, we're at 11.4 million. So definitely today is a very popular day for Virgin, but a couple different attributing factors. One is their earnings. So they did essentially have a triple beat. They beat on earnings per share, revenue, as well as gave very good future guidance. So in the past, Virgin, because I used to cover it on and off, but Virgin, the expectations for their earnings is very low. So they've often beat on earnings per share and revenue, but unfortunately the market still punishes them because they do fail to give good future guidance. So that is the big deal for this earnings, is the fact that they did give very positive good guidance. So what I'm going to do is I'm going to play this near the end of the video. It'll summarize everything that you need to know from their earnings and obviously why it's really moving higher. But at the same time, because of their earnings, there was a new analyst rating that did come out. It was posted after hours yesterday, so of course the market is kind of digesting that, but it was a $4.50 buy. TD Cohen Oliver, who has a 52% success rating. So very good stuff. As a consensus over the last 3 months though, you do have a average of 1458, representing a 142% upside from these prices, despite it going up 77%. And that $36 rating right here by Goldman Sachs, Noah, who has a 50% success rating, is the one that's really skewing it higher. But aside from that, definitely very positive to see analysts are still paying attention to it. And one additional thing that, in my opinion, is really helping Virgin, just to give you a full overview of everything, is this. So Michigan consumer sentiment did come in lower than the forecast. So that's not good data, but the market is wanting somewhat negative data to justify a rate cut. So market seems to be pricing this in, that because of this data that we're going to have a cut. So most likely for the July meeting, most likely. So that is very good for growth stocks. And this is why you're seeing a lot of stocks, not to the same magnitude as Virgin, but you're seeing a lot of stocks go green today. I do see a lot of people posting online saying that this is a squeeze. I just wanted to kind of clear the air because shorts aren't returning. They are increasing 8,000 shares. Not all that much, but I'm going to go over why they're not really doing that much. But 28.2% of the free float's being shorted, works out to be 11.05 million shares. Cost to borrow average 175%. That is a annual rate, not a daily rate. But why a lot of people are really kind of should be watching this as a squeeze play is because there is virtually no shares available. So you're going to see a lot of big buys coming from big players, Vanguard, BlackRock, as they like to buy these types of stock just to lend out. So this obviously over the next hour or a couple hours will jump back up. But nonetheless, as of right now, shorts are essentially screwed. So definitely good to see in my opinion. But aside from that, I know I kind of talked on a little bit the options, but based on the bulls, you are seeing a consensus for it to be roughly around that $7 range. Bears are anticipating for it to be sub 5. With today being Friday, looking at the open interest, you could see also a nice little bit of a small gamma squeeze. So you did have 4,000 at that 3, 5,000 at 350, 4,000 at that 4. So I think just people were not expecting the level of guidance that they did give. So big money is rallying behind it like crazy. Currently it's above all the key fib levels, so no real point bringing that up. But on the actual chart, it is essentially in breakout territory. So definitely good to see. So it's above all the key fib levels. Only negative thing I wanted to kind of bring up about Virgin is the fact that it's overbought. So the first sign of weakness, whether it be specific to Virgin or the broader market, you're going to essentially see a pullback. So again, something to somewhat keep in mind. But most likely over the weekend, you should see a couple other new ratings coming out. And if it's anywhere remotely close to these prices, like 450 or even above, you should see a very nice push higher. And a lot of them are bearish. So you have a $3 sell, $5 sell, and $1 sell. Hopefully a lot of those will revert and change to kind of maybe the high single digits or possibly double digits. We'll have to wait and see, but definitely today is a very exciting day getting Virgin back on the map because of the huge amount of volume. But with all that said, I'm going to quickly play this, go over some of the Coles notes from their earnings that everyone needs to kind of pay attention to. So give yourself a shout out if you have been buying, if you've been selling, what have you been doing with Virgin? I did actually put this as a buy on my Patreon yesterday, because based on the earnings, you kind of saw some good pre-market activity, and with it being heavily shorted, it's usually a good indication that you're going to see kind of explosive pushes higher. I did not anticipate this high. I did put a sell signal. I think it was at like 450, 460 or something like that, but this is very, very impressive. So essentially, again, if you do believe that there's a squeeze play, there's a hell of a lot more room because shorts have not covered. If anything, they've been and are currently increasing. So let me know your thoughts, and without further ado, let's get right to it.
Virgin Galactic targets Q1 2026 for new ticket sales as pre-revenue phase winds down. Earnings call insights Virgin Galactic Holdings, Inc., SPCE, Q1 2025 management view. CEO Michael 𝗖𝗓𝗡𝗖𝗧 stated the company making solid progress toward putting our next-generation spaceships into commercial service, and reiterated expectations that the first research spaceflight will take place in summer 2026, with private astronaut flights following in fall 2026. Management underscored a continued focus on expense control during the pre-revenue phase and highlighted a balance sheet with well over $0.5 billion in cash, cash equivalents, and marketable securities on hand. 𝗖𝗓𝗡𝗖𝗧 detailed advances across rocket and propulsion systems, avionics, flight controls, and mechanical systems, noting that our hybrid rocket motor system is a huge strategic advantage that supports the long service life of our spaceships while enabling quick turnaround time between flights. The CEO described detailed program plans for each element of the ship, emphasizing contingency planning and nimble execution, and announced a forthcoming behind-the-scenes series to showcase the spaceship build process. Starting in June 2025, the company plans to reopen ticket sales in Q1 2026 with a highly bespoke education and sales process, anticipating price increases above the previous $600,000 per seat. 𝗖𝗓𝗡𝗖𝗧 pointed out, "We expect the majority of people who will join in this first wave will be new customers, including both scientists and private systems, while also highlighting repeat business from prior astronauts." Virgin Galactic is midway through a feasibility assessment with the Italian government for a new spaceport in southern Italy. 𝗖𝗓𝗡𝗖𝗧 noted excellent potential in a spaceport located in either Europe or the Middle East. The company is exploring expanded use cases for its carrier aircraft, reporting initial feedback from the Department of Defense and industry partners regarding potential government and research applications. CFO Doug Ahrens stated, "Revenue was approximately $500,000 from future astronaut access fees and event fees. Total operating expenses for the first quarter decreased 21% to $89 million, compared to $113 million in the prior year period." Outlook.management guided for Q2 2025 revenue of approximately $400,000 for astronaut access fees and forecasted free cash flow in the range of negative $105 million to $115 million, indicating lower spending going forward as the required peak investment level is now behind us. The company expects cash spending to continue to decline through 2025 as it completes the current investment phase. 𝗖𝗓𝗡𝗖𝗧 reiterated that we expect to open the first wave of spaceflight reservations in Q1 of 2026, with pricing anticipated to increase from the last ticket price of $600. Financial results. 𝗪𝗛's reported capital expenditures for the first quarter grew to $46 million compared to $13 million in the prior year period. Adjusted EBITDA improved to negative $72 million in the first quarter compared to negative $87 million in the prior year period. Free cash flow was negative $122 million, within the range of guidance. The company ended the quarter with $567 million in cash equivalents, and marketable securities. At quarter end, property, plant, and equipment stood at $249 million, up from $209 million at the end of 2024. Q&A. Oliver Chen, TD Cowen, asked about the total addressable market, free cash flow trajectory, and the impact of tariffs. 𝗪𝗧𝗪 indicated the TAM analysis remains unchanged at 300,000 and expects strong early sales activity, with much of the needed material for the first 2 ships already in hand, minimizing tariff impact. 𝗪𝗛 stated, the trend through 2025 is a declining spend trend. And as you noted, yes, we're still targeting to be below 100 million spend by the fourth quarter of 2025. Chen also inquired about customer engagement and luxury positioning. 𝗪𝗧𝗪 responded, we are really excited as a company to start to make Virgin Galactic a real name in that luxury and aspirational brand space. Greg Conrad, Jefferies, questioned the size and cadence of the first sales wave and ideal backlog. 𝗪𝗧𝗪 explained, having a 1 to 2 year backlog is appropriate. We expect, in general, to be able to fly 125 flights over the course of the year. Conrad also asked about the Spaceport Italy feasibility study and funding. 𝗪𝗧𝗪 outlined that airspace clarity is key and noted government support for the Italian region. Gregory Dahlberg, Wolf Research, asked about repeat business assumptions. 𝗪𝗧𝗪 shared, we have, I'd say in the double digits, low to mid double digits of people who have flown that have raised their hand and want to do a repeat with us. But emphasized that referral business may be more meaningful. Sentiment analysis. Analysts focused on market size, free cash flow, backlog management, and expansion, with a generally positive but probing tone, particularly around financial discipline and sales strategy. Management maintained a confident and optimistic tone throughout both prepared remarks and Q&A, frequently highlighting progress, adaptability, and the unique customer experience. 𝗪𝗧𝗪's statements such as, we are really excited as a company to start to make Virgin Galactic a real name in that luxury and aspirational brand space, signaled high confidence. Compared to the previous quarter, the tone shifted from optimism about design and manufacturing progress to an emphasis on execution, cost control, and the approaching commercialization phase. Quarter-over-quarter comparison. The current quarter placed greater focus on manufacturing execution, cost discipline, and concrete plans for ticket sales reopening in Q1 2026, compared to the prior quarter's emphasis on design milestones and the start of assembly. Guidance language shifted from outlining upcoming investments to signaling the peak of spending is past, and a reduction in cash outflows is expected. Analysts remained attentive to cash flow, sales cadence, and market expansion, with recurring questions about backlog management and sales timing. Management's confidence increased, especially around the transition from pre-revenue to commercial phase and about the repeat business and referral potential. Key metric changes included a year-over-year decrease in operating expenses and growth in capital expenditures as asset build-out accelerated. Risks and concerns. Management recognized the normal risk of delays in aerospace programs, citing a recent delay in wing part arrival and the need for replanning the assembly sequence. 𝗪𝗧𝗪 stated, we've been able to adjust our wing assembly order around the arrival of the late part. In this case, while wing assembly is now starting later than originally planned, the nimble adjustments from the team allow us to adapt to the change without impacting the critical path of the overall project. Contingency planning and schedule buffers were highlighted as mitigation strategies. Analysts expressed concerns regarding free cash flow burn, timing of sales reopening, and international expansion, but management addressed these as manageable within current plans. Final takeaway. Virgin Galactic management underscored substantial progress in advancing its new spaceships toward commercial readiness. With the first wave of ticket sales slated for Q1 2026 and an ongoing focus on cost management, The company expects to transition out of its pre-revenue phase as major capital investments wind down, supported by a strong cash position and a disciplined approach to manufacturing and commercial planning. Management remains optimistic about the demand outlook, repeat business, and the company's positioning as a leader in luxury and experiential space travel.